Welcome to chartingwealth.com. This is our market review for the day beginning Wednesday, the 15th of April, 2015. This is IYY, the total market. We are looking at the 2-day chart. Each one of these candles represents 2 days. Now we see a good trend line. That's this blue line here underneath these green candles. We see a good trend line marking 3 2-day candles, so 6 days of up moves. This is the last candle for the last 2 days, and what we see here, of course, is a continued up movement. We have the crossover occurring right here where you see the MACD line blue crossing over red, which means an uptrend. We also see our derivative oscillator crossing over from red to green. Again, it is considerably later than the first candle 6 days ago, but we do see that occurring. Now, we also have the candles getting closer and closer to the 30 and 34 period moving linear regression lines, and of course getting up to the top here where we see these Bollinger Bands, these volatility bands. You can see how volatility has tightened up over the last few days. Now let's look back, and again this is the total market. Let's look back at the 4-hour chart. That'll give us some idea. Now it's of course a quarter the size of the 2-day chart. 4 hours represents half the day. And we see the original movement in the market starting all the way back, as we've talked about since this time period, around the 6th, where we started the up movement, crossed over the 30 and 34 period moving linear regression lines, and then continued to make an up movement. Now we have seen a doji right here, which is what we call this cross, which means a lot of indecision in the market. We then saw it roll over, and then we saw it end the day up a little bit for the last 4 hours. Now, what we see happening, of course, is we see a convergence where the MACD is getting closer here on the short chart, and we also see the derivative oscillator moving down. Now, is it going to cross over and turn down on us? Well, we don't have confirmation of that yet. We have no crossing. We do have our 2-day trend line that has been drawn. Remember, it was connecting those 6 days, 3 candles, and that is definitely a trigger for us. If that is crossed going down, that is typically a problem. If we see the MACD cross, along with particularly at the same time like we saw here, well, actually, we like it when the MACD and the derivative oscillator cross at the same time. Derivative oscillator actually crossed way early and then sort of monkeyed around going down and then started to move up again. And you can sort of see where that was. We had a lot of downstroke, and then the market started moving up. The derivative oscillator and the MACD act differently. They're different types of oscillators. Actually, both are oscillators. They're different types, so they react differently. We like it when they both cross going up at the same time. Now here, we have no cross yet. We do have a strong uptrend on our big 2-day chart, and it takes a lot more effort for the small chart to pull that 2-day chart over, so we are watching closely. Again, if you were in and rode this up, hopefully you've taken some or all of your profits by now, but continue to watch. May very well turn around and keep going up. Now let's go back to the 2-day chart and let's switch over and take a look at SPY. SPY, I'm going to brighten that screen a little bit for us, is the S&P 500 big companies. And what we see here is, again, another good trend line going up on the 2-day chart, a crossover between the 10th, starting on the 10th, along with the derivative oscillator at the same time, second good up candle moving, and again, looks like a very strong trend up. Still hasn't crossed over the 30 and the 34 period moving linear regression lines, and again, those are period lines, so that would be the 60-day and the 68-day, because these are two 2-day candles. Now, let's again revert back to a smaller chart to see just what's going on. And look, we can see again how it rolled over, but again, leveled off. Again, this movement is totally contained within the candle earlier in the day. Derivative oscillators moved off some. It did here too, but it gained its momentum and speed again. We saw where the market itself moved off for a few days, and then, or the index did, and then moved up. What's going to happen here? Don't know for sure. We don't have a crossover going down, so we don't have anything telling us. We don't have our 2-day trend line violated. We're still above the moving linear regression lines, so we are still in an up move as far as the SPY, the Standard & Poor's 500 goes. Now, if you were short-term trading and you've already caught it somewhere around here and have had a nice move up, hopefully you've taken some or all of your profits, so something just to look at. But again, this is the short-term chart. The long-term chart tells us we are still in this investment. Now, let's go ahead and back off again to the 2-day chart and go to my favorite chart, which is, of course, the Qs. The NASDAQ 100 represents a technology. We see the same thing here. We don't have a crossover yet going up. It's been long in the tooth for the Qs to actually move up. And again, the last up move in the Qs went considerably higher, all the way up to actually the top of the Bollinger Bands here. So we don't even have a retracement yet of that move. We're still in a down move on the Qs as far as the 2-day chart goes. Now let's back off a little bit and look at the 4-hour chart. And what do we see? Well, 4-hour chart, of course, just like the other two, the total market and the S&P 500 has been moving up for the last several days and then started what appears to be rolling over. We don't have it crossing going down yet. We don't have a violation yet in our 2-day trend line. We do want to keep an eye on that. And of course the Qs is still in a downtrend on the 2-day chart. Did have some up movements here, but of course if we back that off a little bit, you can see that these up movements still aren't as high as the up movements over here back a few days ago in March. So let's continue to be careful in watching the Qs and seeing which way it goes. We're going to range back out to our 2-day chart, and we are going to go to gold and see what that precious metal is doing. We were able to draw a trend line going down on gold. This is the 2-day chart. We still don't have confirmation of gold going down. We see how the derivative oscillator is moving over. We see how the MACD is converging. Remember, converging coming together, diverging going apart. Well, it has to converge in order to cross going down. We don't have that confirmed yet. I have tried to draw a bit of a trend line for us just in case that continues. So let's range back out now to the 4-hour chart and just see what we see. Here's, of course, our 2-day trend line. It has been violated already going down. Isn't that interesting where the market ended today? And we can see that the 4-hour chart has a strong crossover going down and continues to move down on gold. And of course, if we do some retracements and look, how well has this 4-hour chart been leading us? It has had some little bit of decency in the past, and particularly in this strong up move, but the down moves on the 4-hour chart, well, if we go back here, way back, we can see some significant down moves from where gold reached its last high back in January, February time frame, right there toward the end of the month. But where we have now, if you look at the 4-hour chart, you can see that gold moved over back on about the 8th and has built up a little bit, never as high as it was previously, and it has continued to move down. Again, ranging back out to the 2-day chart, we can see where gold has not reached anywhere near the peak that it had before, although on the 2-day chart it is still, and that is the stronger chart, still in an up move, but it sure looks like it's losing that momentum. Well, that is the review of our charts for Wednesday, the 15th of April. Hope that this is helpful to you in your trading. Pay attention to everything as this week progresses. We appreciate you joining us. Hope that this review is helpful. And again, review these charts every day. Start using your wits and your knowledge to figure out which way the market is moving. And I would encourage you to always, if you're not actually buying and selling things in the market because you've not garnered a skill set where you're comfortable yet, please at least note where you would buy in and where you would sell, or get online and do simulated trades. Plenty of free sites where you can do that with major brokerage houses, and start getting used to entering and exiting virtual trades. Thanks again for joining us. Great trading. Hope you have a wonderful day in the markets.